Good afternoon, everyone, and welcome to Stock Market Today. It's Coram and Shreve here with a look at the market on this Wednesday, where we saw the tech rally fade as the day progressed. So much for the mega cap tech stocks coming in to save the day, while the Nasdaq did post a gain for the day. It closed well off of its highs, and this comes after yesterday's big plunge.
Yeah, not such a great showing from the stock market today, Ali, but we'll take a look at, let's start by taking a look at Microsoft's earnings and see how Microsoft fared today. But like you mentioned, the Nasdaq did give away a lot of a big gain today. Also want to take a look at Skechers ahead of its earnings report tomorrow. They report along with Crocs, and finally in the healthcare space, Zimmer Biomet, ZBH, been under accumulation lately, and the stock is just trading really tightly near highs. So ZBH ticker there.
Okay, we will take a look at those, but first let's analyze the major indexes. The Nasdaq up 0.5% today, but it was the only index in the green. On the downside, we had the Dow down 0.7%, the S&P 500 off by 0.4%, and the Russell 2000 down 0.9% today. So we, in yesterday's session, saw that undercut of the sideways action by the Nasdaq. Some promising action from Google and Microsoft in yesterday's after hours, some of which translated today. We'll take a closer look at Microsoft, but goes to show you that the weight of the whole market can't be on one or two stocks' shoulders.
Yeah, I mean, even when the Nasdaq was up more than 1% earlier in the session, breadth was still negative on the Nasdaq. So we have been just talking about the weak breadth in the market, on IBD Live, and it was really in full display again today because the Nasdaq was up strongly. Still could not get winning stocks above declining stocks. So at least, for Microsoft, or for the Nasdaq, I should say, it was just not such a great showing. It avoided a distribution day yesterday, but you see volume pick up the pace today, and the Nasdaq can't hold those gains. It just tells you that there were sellers again in the stock market today, even though it's holding above its 50-day moving average for now.
Right, and we still have more big tech earnings reports coming out tonight and tomorrow as well. So we'll have to see. We could get a bounce. We could be in for volatility or more weakness. But it seems like in any of those cases, we're not seeing enough evidence to feel like we should be putting a lot more money to work in this market.
No, again, we lowered our outlook yesterday in the big picture, and we just feel like the risk level is even a little more elevated than it was, say, last week. So we knew with that sharp drop down to the 50-day moving average yesterday. I mean, a day of accumulation would have been nice to see, and it would look like we had it for a little while there when the Nasdaq was up 1.4% intraday. But I think the market is just still telling you that it's concerned about the economy, it's concerned about the banking sector. Of course, it's concerned about first quarter earnings season. But again, the results from Microsoft were pretty good. Google was lower today, but those numbers weren't too bad either. But so it's just kind of a tough day for the market, and the uptrend is under pressure now, and we'll just have to take it day by day here.
Yes, well said. Let's also take a look at the S&P 500 bleeding further after closing below its 21-day line in Tuesday's session, now getting close to the 50-day line. It's still managing for now to hold above its follow-through day. I guess the low would be right around 4,000, but it wouldn't take much to have it round trip back to where it was on that March 29th follow-through day.
Yeah, you saw higher volume on the S&P 500 yesterday with that break of the 21-day moving average, and volume rose from the prior session. You can see today it looks like it came in just a little bit lower, so we avoided distribution on the S&P 500 today. So it's still a fairly mild count: 3 distribution days on the Nasdaq and just 2 on the S&P 500. But again, I just think that the weak breadth in this market is a story that you have to keep paying attention to, and it's just good reason reason to stay conservative here. And if you don't need to be aggressively invested in stocks. If you find one or two names that are acting well, you can
Right.
stick with them. But just understand that the market tide seems to be flowing more negative than it was in recent days.
Definitely makes sense. Here's a brief look at IWM, the Russell 2000 breaking more with the banking weakness down another almost 1% here today. And the Dow also now joining the rest of the major indexes below the 21-day line, getting close to its 50-day line. And we also want to take a look at RSP and QQEW. These are the equal weighted indexes for the S&P and Nasdaq 100 respectively. So even though we saw a little bit of a better showing in the market cap weighted indexes, here the equal weight showing what we've been this is why we've been looking at these for so long. There's a definite weakness underneath the surface. And if you look at QQQ, it was still up 0.6% today, although off highs. But QQEW shows that if you equally weight the Nasdaq 100, I mean, it was down today, and not down by just a little bit, almost 0.8% here, Ken.
Yeah, I know this is you and Ed discussed this earlier in the week, but it just bears repeating
Oh,
that
yeah.
these equal weighted ETFs, S&P 500 is a market cap weighted index. So when you look at an equal weight S&P 500, you really do see how breadth is. There's kind of a lot of damage below the surface here, and even with the QQEW, which is the equal weight Nasdaq 100, fell a lot more than the 100 today, and that's just, again, we knew that breadth was negative. So there's just some weakness underneath the surface here, which means that you got to keep exposure light, and we've been decreasing our market exposure in the leaderboard model portfolio to maybe around 50%, a little below 50% invested at this point. So
Right.
just play some defense here, and hopefully we'll see an improvement in breadth in the not too distant future.
hmm And we've been keeping track of the chip sector action. It was up a little bit today. Maybe we can take some solace in that. But if you take a step back, it's not looking like it's a great week so far, Ken, for chips.
No, that was a bad break for SMH. Yesterday it was a gap down. You can see volume was heavy, and then it tried to rally back in light volume
hmm
today, and it looked a lot like the Nasdaq, just gave back an early gain. So this one just looks like it's ready to take a little breather here for a while. It could try to jump above the 50-day moving average again, maybe get back above that 250 level, but that sharp break yesterday in heavy volume tells me that this is probably going to just trade sideways for a little while, and you get some weakness in semiconductor stocks, and that doesn't bode well for for
Right.
the Nasdaq either.
Absolutely. Well, there was at least one standout in today's session, and that was Microsoft, which reported a strong quarterly report. The stock up over 7% today and able to hold the bulk of those gains, closing nicely here with strong volume behind it as well, Ken.
Yeah, definitely. And this was, I think it was as good a earnings report as the market could have hoped for. I mean, you had a nice earnings and revenue beat. And you also had revenue guidance for the current quarter that was where the midpoint was above expectations. So the numbers were strong throughout. Cloud, the Azure business, their web services, cloud computing, still showing strong growth. That was in line, maybe a little better than expected. And then they just kept saying Microsoft is still spending on cloud infrastructure, and they're also spending a lot on artificial intelligence, and said that that's going to make up a meaningful part of revenue down the line. So they've been investing heavily in open AI, and so there's some exciting things going on at Microsoft. And stock was up 7% today. Uh, Came close to the 300 level, backed off highs. Market didn't quite let it run here, but it looked like a solid day and a good earnings report. So I think there's reason to be optimistic about
Mhm.
technology earnings in light of Microsoft's results, but still have a ways to go here.
Right. And in terms of how to trade this stock, I mean, there's several strategies that traders can go with. I mean, one is just watch it from here. Can it continue to hold this gain, trade tightly from here, and then maybe take out 300? Or I guess if you were a little bit more aggressive, potentially nibble at it here, Ken?
Yeah, I think so. I think Ed Carson, our colleague, brought up a good point. If you go to the weekly chart here, you can almost look at this recent pullback off of that 292 high. There you go. Yeah, so sort of like a kind of a big long base here, and you see that nice little handle, those two down weeks in the weekly chart here. So there's some people that might look at this as a buy signal today. Again, it's a tough environment for stocks to make meaningful headway, but I can see why people looking at Microsoft today calling it a breakout, especially in the prior 2 weeks when it drifted lower and formed a nice little handle in light volume.
Yes. All right. Well, we'll have to see if it can hold up as the week progresses. And now we want to take a look at SKX. This is Skechers ahead of its earnings report tomorrow. And it looks like it recently got above this 49 level, hanging around 50 with earnings due coming up tomorrow.
Yeah, this industry group, we've been talking about it a lot. You've got Crocs, Skechers, Deckers. I mean, the group has been quite strong, and so you got Crocs reporting before the open, and then you have Skechers tomorrow after the close. But the stock trading right around $50 a share, and right at the top of a base here, showing some signs of accumulation. I just looked at a call option trade, an earnings option trade with a 50 strike price, and the premium was right around $2.30. And when you divide that by the stock price itself, it gave a pretty low risk trade. So it's a monthly option, expires March 19th, I believe, and so the call option looked pretty interesting here with a 50 strike price, and one way to possibly take advantage of a good earnings report. So again, it was looking at a monthly call option that expires the third Friday in May. I think it's the 19th, and the 50 strike price had a premium right around two and a quarter, $2.30. So it seemed to be a relatively low risk, potentially high reward trade here.
Right. And it looks like we could see improving numbers moving forward from Skechers, but of course we'll get a little bit more clarity on that when they do issue their quarterly report. But this is definitely one to look at, Ken, with this group ranked number 3 out of 197. So we've seen other shoe stocks run higher. So I guess the question is, can we see Skechers do the same?
Well, I mean, Skechers has a pretty loyal customer base, just like Crocs does, and Crocs is showing a little better bottom line and top line growth at this point. You can see, look at the fourth quarter revenue at Crocs up 61%. Now, part of that was because of that acquisition they made of Hey Dude. Growth is a little calmer at Skechers, but again, I think expectations are high for a good quarter here, and like I said, the stock is right at the top of a base here, so earnings call option trade could make sense.
Okay. And we also want to take a look at ticker ZB, oh, not SBH, ZBH. I fat fingered that one, which had a strong move out of a breakout area and is now holding really nice and tight.
Yeah, I think healthcare still makes sense to pay attention to here, especially if money is going to kind of rotate out of technology. That story hasn't fully played out yet, so we don't know if it's going to happen. But if technology stocks continue to act weak here, the healthcare space, specifically the medical products group, looks pretty good. So Zimmer Biomet is you can see an accumulation distribution rating of A, and when you look at the daily chart, it's another stock that has been showing signs of accumulation here. So lots of above average, volume weekly price gains, and even after a big move, it is trading tightly and holding near highs here. So price action like this can often present an additional entry, but you just want to be patient here. Recognize that the stock is still showing strength, and fundamentals not great here, but we're seeing more and more technical setups that look bullish, and you got earnings that are not so great, but just pointing out some good technical action in the chart here.
Exactly. And as you mentioned, a strong group. So
Hmm.
worth keeping an eye on. And speaking of healthcare and medical sector names, Ken, you're going to be on the IBD podcast this week to give us more insights about how those stocks are performing, what themes that we're seeing. So traders can keep an eye out at investors.com/podcast for that to drop tomorrow. And before we go, let's take a quick look at the likes of Meta. Look at this, Ken, adding to the roller coaster drama of this week, potentially seeing Meta up 9% in the initial reaction to its earnings report.
Looks good. It's a leaderboard stock, so we'll take it. You can see Meta couldn't keep up. It just kind of gave back gains with the Nasdaq today, but nice to see the stock up quite sharply. It looks like in after hours trading. So I'll have to take a look at the earnings report and see what people are so excited about. They've been in cost cutting mode, and Meta strikes me as a kind of a lean, mean fighting machine these days. So I never like to see job cuts and layoffs, but they've been tightening their belt, and looks like there's some good news here.
And as a reminder for folks, this was the leaderboard entry on 314. So could be good tomorrow. We'll have to see how things shake out. And then also didn't ServiceNow report. It's up 2% in its initial reaction after the close.
We'll take it.
We'll take it. All right. Well, thanks so much for tuning in, everyone. We'll be back with more tomorrow morning on IEBD Live. So we hope you tune in, investors.com/IEBD Live for all the latest on the broad market, stocks we're watching, and so much more. So we'll see you then. And we'll also see you right back here tomorrow after the close.